So today we're talking about the Bank of England base rate increase. And the Bank of England today increased the base rate by 0.25%. This is the highest level in 14 years. And if we look following the 2007-2008 financial crisis, we saw the base rate was reduced and it was around the 0.5% for a very long time period. So if we're comparing today's base rate to that, and of course, and obviously, the base rate seems rather high. However, let's take a step back. Let's look at the early 2000s. Let's look at the 1990s and 1980s. And actually, if we take a long-term 40-year average, I think you'll find that today's base rate, even though it may seem relatively high, over a 40-year time span, is actually quite reasonable. Now, let's move on to why the base rate has increased. And one key driver is inflation. For anyone that has studied economics 101, if inflation is increasing, which is the price rise in goods, then one way to combat this is to increase the interest rate. So the increase in the interest rate is one tool or mechanism we have as a country to combat and curb the growth of inflation. So quite surprisingly in the news this week, we saw that actually inflation rose in February from January, whereas it was expected to fall. So this gives you maybe an indication on where we are and maybe what the Bank of England needs to do next to further combat the growth in inflation. Now, that's one reason why the base rates have increased due to inflation and double-digit inflation. But let's try and look where we're going to be in the future and try and make a bit of a guess, and then we'll come on to what impact this has had on us as property investors. So going forward, where do we think we're going to be? Well, I know some people who are thinking that when it comes to 2024, the base rate is going to slowly start decreasing. And this is one potential option. Last week, I read an article in the BBC that said, we are no longer predicting a recession here in the UK. Now, honestly, is that true? Is that actually going to happen? I think it'd be quite crazy and quite phenomenal if that is the case. Have the price decreases stopped and we're not going to see any more decreasing in price? Well, if we look at house prices over the past 6 months, in November, December, January, we saw a slight fall. But in February, there was a very, very small increase, or shall I say, it did not decrease. So, where are prices going to be? It's a really important question to ask. And it'd be interesting to look back, for a year from now and look back and see where the price trend is heading. Because as I have already alluded to, that article that I read last week suggests that actually prices are not going to drop any further, which I think I'd be quite stunned if that is the case. I think there's a little bit more fall to go in the market. That's my opinion. But let's come on to this base rate increase and what effect and what are the impacts and implications on property prices in the UK and more importantly us as property investors. So first of all, the obvious, if you are on a tracker mortgage, well, all of a sudden your monthly mortgage payments have increased because the tracker mortgage naturally follows the Bank of England base rate. So maybe now's a good opportunity to have a chat with your mortgage broker to see if they can get you on a better deal. But let's come on to another thing, which is most investors are on fixed term mortgages. Well, obviously, the fixed term mortgages that you already have remain unchanged as you fixed that rate of interest for a certain number of years. However, what about the new acquisitions? For those investors actively looking to buy more property. Well, the nice thing is lenders have already factored in base rate increases. Well, let me rephrase that slightly. Lenders have already factored in maybe the short-term base rate increases with a good degree of certainty. Again, long-term, really, who knows what's going to happen. So all of a sudden, you're not going to see your lenders increase their offerings in line with this current base rate increase because they've already accounted for that. So there's no need to worry.